This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Global oil demand growth will slow to just under 1 million barrels per day, BPD, this year and next, the International Energy Agency, IEA, said, as Chinese consumption contracted in the second quarter amid economic woes. Global demand in the second quarter rose by 710,000 barrels of oil per day year-on-year in its lowest quarterly increase in over a year, the IEA wrote in its monthly oil report. China's preeminence is fading. Last year, the country accounted for 70% of global demand gains. This will decline to around 40% in 2024 and 2025, the IEA said.
OPEC stuck to its forecast for relatively strong growth in global oil demand in 2024 and next year, saying on Wednesday that resilient economic growth and air travel would support fuel use in the summer months. The Organization of the Petroleum Exporting Countries, in a monthly report, said world oil demand would rise by 2.25 million barrels per day, BPD, in 2024 and by 1.85 million barrels of oil per day in 2025. Both forecasts were unchanged from last month. Expected strong mobility and air travel in the Northern Hemisphere during the summer driving holiday season is anticipated to bolster demand for transportation fuels and drive growth in the United States, OPEC said in the report.
Moving on to the top news in the energy sector.
India's state-run refiners are jointly negotiating a long-term oil import deal with Russia, a government source aware of the development said on Thursday. India and Russia have yet to finalize terms, such as the payment currency, for the imports, the source said, declining to be named because of the sensitivity of the matter. Joint negotiations of state refiners with Russia are already happening, the source said. Indian private refiners Nayara Energy and Reliance Industries have already signed term deals for Russian oil imports. Nayara is part-owned by Russian oil major Rosneft.
Combined electricity generation from solar and wind farms in the United States surpassed output from nuclear plants for the first time during the opening half of 2024, cementing renewable energy assets as the primary source of clean power in the country. Electricity generation from utility-scale solar and wind assets during the first half of 2024 was a record 401.4 terawatt-hours, TWh, compared to 390.5 terawatt-hours from nuclear reactors, data from energy think tank Ember shows. That marked the first time over a half-year period that renewables electricity supplies exceeded nuclear-powered electricity output, and is a significant milestone in U.S. energy transition efforts. Next, we have the top news in metal markets. China approved no new coal-based steel projects in the first half of 2024, researchers said on Thursday, accelerating its shift towards green production as it prepares for the impact of a new carbon levy on exports to Europe. Local governments approved 7.1 million metric tons of new steelmaking capacity from January to June, but all of it was for cleaner scrap-based electric arc furnace (EAF) projects, rather than coal-intensive blast furnaces, said the Center for Research on Energy and Clean Air, CRE. China's efforts to cut production and recycle more scrap via EAF could reduce CO2 emissions from the steel industry by 200 million tons by 2026, equal to the entire emissions of the EU steel sector, CRE said.
Iron ore futures prices rebounded on Thursday amid mounting speculation that top consumer China will announce more stimulus in its third plenum after disappointing June inflation data. The most traded September iron ore contract on China's Dalian Commodity Exchange recouped early losses, ending daytime trade 0.8% higher at 828 yuan, $113.90 a metric ton. The benchmark August iron ore on the Singapore exchange rose 2.5% to $107.90 a ton, as of 0711 GMT. It hit an intraday high at $109.25 a ton earlier in the session.
We will now look at the top news in the agricultural sector.
Strategie Grains has increased its monthly forecast for EU soft wheat production and cut its outlook for the bloc's barley and maize crops as it factored in good harvest indications in countries such as Spain and worsening prospects in France. For soft wheat, the EU's main cereal crop, the consultancy projected 2024-25 output at 122.3 million metric tons, up from 121.8 million forecast in June, though still down 3% from last season and the lowest level in 4 years. France, the EU's biggest wheat grower and exporter, has endured months of heavy rain. The latest harvest feedback and area estimates suggest soft wheat production could fall below 29 million tons, Strategie Grains said in a monthly cereal report.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.